Hello, I'm Garth Broughton, and this is Martin Weiler. We're here to talk today about what's going on in the markets and how our clients are feeling about it. Martin, I just got my semi-annual statements in the mail, and investments are down. I've been having a hard time so far this year, and I'm sure our clients who've been receiving their statements as well are feeling that concern. What are you hearing and what are you saying?
Sure. During periods of market distress, it's perfectly understandable that our clients too are distressed, watching their hard-earned dollars decline in value. What we have found helpful is to return the conversation to a somewhat longer-term time frame where we look beyond the events of the now to the next 3, 5, 7, and 10 years and beyond. We see this as a relatively short-term market environment driven by 5 factors, the big 5 I call them. Rising interest rates, runaway inflation, we've got war in the Ukraine, the tail end of COVID, and supply chain bottlenecks that most of us have experienced firsthand. I like to remind clients that these factors won't always be with us, but what will be is the relentless dynamism of capital markets. And over the medium to long term, capital markets have delivered solid risk-adjusted returns for patient investors who look beyond the headlines of today and focus on the long term.
Okay, so the other story in the news seems to be recession. I'm hearing a lot about that, and I'm wondering whether investors should be getting out right now and waiting till that plays out before they get back in the market.
Right. The dreaded R word, recession, it has been a recurring theme over the past century. Here's why investors should not fear recession. First and foremost, they too are short-lived, and inevitably markets recover from recessionary setbacks and again go on to bigger and better things. Recessions historically have lasted about 1.5 years, okay? Markets are forward-looking, which means that the day the R word is invoked, it's actually good news because it means we're that much closer to the market recovery that again is half a year or more ahead of the rebound in the real economy.
So when we get our statements and we see that we've lost a serious amount of money, it causes me some fear, and I'm sure it's causing our clients fear as well. What are you telling people who are coming to you and saying that they're upset?
Great question. First and foremost, there's a material difference between a decline in the value of one's portfolio and a loss. A loss is, of course, where you buy something at price X and sell for X minus Y, a number lower, taking a notional number, which is lower, and turning it into a real decline or loss through selling. So we again reframe the conversation in terms of a longer term time horizon and remind clients that their June 30th statements were a data point, as was December 31st. Clearly December 31st was a better data point, but in either case clients were not withdrawing, in whole or in part, all their money, and so it's a number, okay? And where is that number going to be? We are supremely confident that going forward, that number will look better, as drawing on a century of capital markets. Over time, they go in one direction, and that's up.
So when a client opens their statement and they see that their portfolio is down and they're upset, what should they do?
Call us. We've always taken a client-facing, client-focused, relationship-based approach to our clients at First Capital. And it's so important that we understand what they're thinking, what they're feeling. We strive to be as proactive as possible, but we welcome hearing back from clients that they're feeling anxious, okay? And our role at that point in time is to give them the information that they need to see what's happening now in a larger historical context. And I've found over time that in placing the here and now in a larger context, clients are reassured that their money is in safe hands and that they're going to be just fine.
That sounds great. Thanks, Martin.
Thanks, Garth.
I think the number one takeaway for our clients there is to call. When you're feeling upset, when you have concerns, when you hear something in the news that raises questions for you, we want to hear from you. We want to talk to you. We want to know what's going on in your world, how it relates to your portfolio, and we want to help you know your money. Thanks for joining us.